Good morning, traders, and welcome to BCI's Morning Market Outlook, where we cover the key moves across major assets. First up, let's have a look at the US dollar index, DXY, which pushed higher on Monday, hitting 98.65, which is its highest level in nearly a week. The move was largely supported by easing trade tensions as the US and EU announced a new trade agreement. Instead of the threatened 30% tariff, a lower 15% rate will be imposed on the EU. Markets are also watching developments between the US and China, with talks scheduled for today. Most are expecting the current trade truce, which is set to expire on the 12th of August, to continue. Traders are also shifting their attention towards the Federal Reserve's policy meeting later this week. No rate changes are expected, but upcoming US data, including GDP, payrolls, PCE inflation, and ISM manufacturing could provide more clues about the economy's direction. From a technical angle, the index bounced off support at 97.10, which now appears to be a higher low. The rebound has sparked talk of a possible trend shift, especially after breaking above the 34-day moving average at 97.83. Key resistance levels ahead include the July 17th high of 98.93 and the psychological level of 99. However, a drop below the 50-day moving average at 98.3 would invalidate the bullish setup and shift focus back towards 97.5. Next up, let's have a look at WTI, crude oil, which jumped more than 2% on Monday to about $66.70 as geopolitical risks flared up again. President Trump issued a warning to Russia to implement a Ukraine ceasefire within the next 10 to 12 days or face a 100% secondary tariff, which heightened fears of a potential supply disruption. In Europe, the EU rolled out new sanctions, including a lower price cap on Russian oil and a ban on refined products from third countries, set to kick in from January. Combined with OPEC's limited spare capacity, this could tighten global supply. Prices also drew support from a $750 billion EU deal to purchase US energy. Still, concerns of oversupply linger as OPEC may lift quotas again in September. The ongoing US-China trade truce could also slightly improve the demand outlook. Technically, WTI is trading around 66.5. If prices fall below the 50-day moving average at 65.5, the next key support is at 64.59, which is a 100-day moving average, $64, and June's low of 63.73. A clean break below that zone could send prices towards the major psychological level at $63. On the upside, resistance sits at $67.08 and $68.36. Next up, let's have a look at my favorite, gold. Gold prices fell for a second straight session on Monday, closing down 0.69% at about 3314, the lowest in nearly 3 weeks. A stronger dollar, improved risk appetite, and the US-EU tariff deal all weighed on demand for safe havens. COMEX August gold futures also posted losses for the fourth day in a row, while traders now await clarity from the Fed's upcoming meeting. Key US macro data this week could also further influence the outlook for both gold and the dollar. On the charts, gold failed twice to break its descending trend line formed from the $3,500 all-time high and the lower June peak. A bearish engulfing pattern has now formed, and gold has dropped more than 2.5% over the past 3 days, erasing much of the earlier 32.46 to 34.38 rally. Support lies at 3311. Which is Monday's low, and 3312, which is the 80-day moving average. But if $3,300 breaks, it could possibly trigger long liquidation down towards 3285 and 3284. On the upside, resistance is seen at 3345 and $3,400. Lastly, let's have a look at the Australian dollar, which weakened for a third straight day, sliding to near a 1 week low of 6.515 on Monday. Markets are closely tracking the meeting between US Treasury Secretary and China's Vice Premier, with expectations that the current tariff truce will be extended. The Financial Times also reported that the US has paused export restrictions on key tech to China. Since China is Australia's largest trade partner, and any shifts in Chinese trade policy tend to directly impact the Australian dollar. Domestically, Australia's Q2 CPI data, which is due Wednesday, is a key focus. It's expected to heavily influence the Reserve Bank's next move. RBA Governor Bullock reiterated last week that the central bank remains committed to stable inflation, but acknowledged that global uncertainties still linger. Technically, the Australian dollar remains within a rising wedge pattern. Last week, it hit an 8 month high at 6625 before retracing. Breakout above that level could reopen targets at 6687 and 67 cents, but Monday's strong bearish candles reinforces the short-term reversal. Support is now in focus at 6515 and 65 cents, with further downside towards 6483 and 6435 if those levels give way. That's all for today's morning market analysis. Thanks for tuning in. We'll be back tomorrow with more updates. As always, manage your risk and happy trading.